I'm really excited for you because if you're like me, you're probably like, how do I make my money work for me? I've been hearing all these things on social media. I've been hearing all these things on TikTok, Instagram, Facebook. People are talking about becoming your own bank, how the wealthy are getting wealthy, how you can use life insurance, how you don't have to, whatever the case may be. But you're probably like, but I'm still a little confused and I want to know how this works. Or I've seen things and I just need a little bit more education. Well, congratulations and welcome to my classroom. I am Crystal Walker, and I've been in financial services in the life insurance industry for about 6 years. And before I got into the industry, I did not know a lot about money. The only thing that I knew was how to make money and how to spend it. But I did not know a lot about investing outside of basic things. I didn't know what you could use life insurance for while you're living and even how your family can benefit from it when you're no longer here. I got into the industry by way of just looking for something, and I turned into an entrepreneur from employee. And I ended up being like, I need to know how money can work for me so I'm not always doing the continuous cycle of working, and my money never working for me. And I ended up getting licensed in the life insurance industry. Now, I ended up starting a car dealership with my husband. And one of the biggest things is that we invested a little over $100,000 into a car dealership after I quit my job. And less than a year, we lost all of that money and we had to start all over again. Had we known about the information that I'm going to give you today for free with our new Modern Wealth Life Insurance Guide, it could have changed a whole lot of things drastically in my life and in my husband's life. One of the biggest things is that the average American, more than 50% of Americans are living paycheck to paycheck. And it's not because that the average American is lazy, but one of the biggest things is we don't know where to put our money. So the average person is going to work, is working hard, but while they're at work working, their money is at home, tucked in a blanket, not doing anything, not gaining any interest, and not growing for them. So today, what I'm going to talk to y'all about are some insurance tips, money tips, financial tips that I learned that have helped change my life. And it has also helped thousands and thousands of clients that our organization and our partners have been able to help with these insurance tips. Some simple life insurance secrets for wealth. Sometimes I will talk to people and they will say, you know, Crystal, I've been trying to get this information, but I've talked to certain people and they won't really give me what I'm looking for, or I feel like people just want to charge for everything. Well, congratulations again. This is your free life insurance guide and tips for wealth. What do we do? NMW as a whole, what we do is we educate families on how money works through different financial services and products. Now, when it comes to financial services and products, what we do is we actually work with and market for a lot of the top-notch A-plus insurance companies and financial companies, right? So you'll see companies here like Fidelity, National Life Group, SILAC, American National, Mutual of Omaha. And what we do is we find the best deals according to what is the best fit for our clients. Because when it comes to life insurance, when it comes to money, it is not a one size fits all type of thing. It's not, oh, okay, well, do you have $100? You have $200? I'm just going to throw you in this product. No, life insurance and financial products are all about customization. And so what we do is we're partnered with a lot of amazing companies and we help customize products for your lifestyle, for your goals, for your financial life strategy, for whatever that is that you need. Just think of us like an amazing buffet that you can go to and you have different options based on what you like and what you need. With that being said, we're going to talk about how the average American is not in the right vehicle. Even just financially, the average person is just putting their money in bank accounts and CDs and 401ks or whatever the case may be, but they do not know about other products within the life insurance industry and financial services that could literally change them and their family's life. we're going to talk about what is life insurance and how does it work. Some people don't know what life insurance is, or they don't really know how it works. And so we're going to talk about it. Life insurance is a legal contract between an individual or business and an insurance company that provides financial protection for the life of oneself or another person, the insured. In exchange for the policy owner's regular and timely payments into the policy, the insurance company agrees to pay a benefit upon the death of the insured according to the terms of the policy. In other words, a lump sum payment, aka the death benefit, is paid to a specific recipient, beneficiary, okay, upon the death of the insured. Life insurance may also offer living benefits, which we'll talk about in a little bit. Some policy features include being able to access money in the policy prior to death and or being able to use the death benefit to pay for the treatment of critical, chronic, and terminal illness. Life insurance is an amazing, powerful product. A lot of people just are not educated on it and really don't know what it can do. So we're going to talk about the first vehicle in life insurance, which is going to be term life insurance, which is a very popular product, but sometimes people don't know how they actually work. So we're going to talk about the term policy, and y'all will see it's like buying a nice Honda, a nice Toyota. Why? Because it's not going to break the bank, and you can get a whole lot of bang for your buck. So it's very affordable, and you get a whole lot of bang for your buck. Now, some advantages of it is mortgage protection and return of premium. Mortgage protection is, say that somebody is a homeowner. The average American, when they buy a home, that is the biggest asset that a person can buy. But sometimes what happens is people will buy a home, aka that asset, and what happens is the breadwinner or somebody in the household will pass away and the home is not paid off. And then you hear the stories of the wife and the kids or whoever, the family, losing the family home because the home wasn't paid off and the breadwinner is no longer there to make the payments on the home. Where mortgage protection comes in is, God forbid, one of those situations happen. Somebody passes away before the home is paid off. Well, the person, the family, aka the beneficiary, can actually use the policy to pay off the home so that the family can keep that asset and it doesn't turn into a liability. It makes it really, really simple and easy. Mortgage protection. Another benefit is return of premium, which we'll talk to on the next part, okay? Now, one of the things with term is that it does also have its disadvantages based on who the person is that is needing the policy. One of it is it's called term for a reason because it actually terminates after a certain amount of time. Look at it like renting a home versus purchasing a home. You rent a home, it's not yours. You don't own it permanently. Like you have it for a set amount of time. That's exactly what a term policy is. So it does expire after a certain amount of time, 10, 15, 20, 30 years. Now, one of the other things is that it does not build money in it. So there's no money build growth in the policy. Meaning there are some policies that you can actually build savings and cash into the policy. With term, you cannot. You get the policy, God forbid something happens to you. Well, your family, aka your beneficiaries, are going to get a tax-free benefit. It's one of the easiest ways to create wealth. But advantages, let's recap. A lot of bang for your buck, mortgage protection, and some of them can offer return of premiums. Disadvantages, it does expire after a certain amount of time, and then you have no money growth into it. So on term policies, remember this term. It's like renting versus owning. Once the policy expires, if you decide that you still need life insurance, well, you will have to renew the policy. And now you'll be paying the price of somebody 30 years older versus where you were 30 years ago. Okay. But term is an amazing policy. You get a lot of bang for your buck. Very affordable, easy way to create generational wealth, and it honestly stops all the GoFundMes and fundraisers and plate sales that you see all over social media with people having to do. Okay, So now let's talk about the next vehicle, which you'll see now it's like a BMW or a Lexus. And this is called an ROP, and that stands for return of premiums. Now, return of premiums advantages is you can use it as mortgage protection as well. Hey, I have a home, we have 20 years left on it. God forbid something happens to me within those 20 years. I want to make sure that our home is taken care of. But if I do not pass away within that, then I would at least like the return of premium feature, which is the insurance company will literally give you a refund of the money that you placed into that policy for that specific time. It's an amazing benefit. And I always tell my clients, look at it like if you're putting money into a bank account, right? You don't get any growth on it, but you know the money's in there. And then when you need it after a certain amount of time, then that's like the bank giving you the money back. That's exactly what the return of premium feature is, and where it says savings. Because if you put a certain amount of money into a policy for 20, 30 years, you literally just save that money and you're still alive, you get that money back. If you pass away, your family is getting multiple six figures or millions of dollars of a tax-free life insurance benefit based on what you signed up for. And then they also have something that is called living benefits, okay? And what living benefits are is, God forbid, somebody were to get sick while they're living, critically injured, critically ill, chronically ill, or terminally ill. There are policies that you can leverage while you're alive to take care of medical bills, hospital bills, or even be able to take care of bills at home. Like, very powerful tool, because the number one cause of bankruptcy in this country is actually medical expenses. Even as much as people pay for health insurance, we know that it does not simply cover everything. So you can actually be with the right company, even with a term or ROP, and you can literally have that tax-free benefit in the policy to be able to use it. God forbid you were to get sick while you're living. Okay. Now, some disadvantages is that based on the ROP, depending on the ROP, it does still expire after a certain amount of time. And then there are also age restrictions based on how old you are. And then still in the ROP, in this particular one, you get no interest gained because you're not actually building the cash value into the policy. Now, there are actually permanent policies that do have the return of premium feature, which we will get into. But this here is the ROP, aka the Mercedes or the BMW of life insurance. Mortgage protection advantages, return of premiums, living benefits, create generational wealth. And then remember, the disadvantages are that depending on the ROP product, it will expire after a certain amount of time. Depending on your age, you may not qualify and you get no cash value growth in it, but it is an amazing policy that people will choose because they want life insurance, but they just want to make sure that they can get a refund of their money. ROP, yeah, you know me. The next one that we're going to talk about is going to be like the Bugatti, the Lamborghini, the Ferrari, or whatever you want to say of life insurance. We're with the exotics now, okay? And just like when you go and buy you can't go and buy a Toyota or a Honda for the same price as you can go buy a Lambo or Bugatti, right? Because the Bugattis and the Lambos and all that, they have a little bit more bells and whistles, and they do a little bit more things than what the average car will do. This is the same case with the permanent policies. Let's talk about the advantages. This is the product here to where if you're on social media, this is where you hear people talking about you can become your own bank. You can use this to invest in real estate. You can use it to send your kid to college. This here is the product that they're talking about, okay? So some advantages, mortgage protection, but where we say savings in the permanent policy, we actually mean savings because you build cash value in the policy, which is cash value savings in the policy with the index crediting strategies. What does that mean? In simple terms, you place money into the policy, the insurance company goes and invests your money, and your money mirrors the market, and you can get a portion of the market's gains. And depending on the company and the strategies, there's different interest that you can get, but at the same time, you don't lose money in the market. So instead of going to the bank and putting your money in there and putting, say, I have clients that put $10,000, $100,000 in savings, and they're gaining 0.01% for the entire year, which means that it's taking 7,200 years for $1 to double. Your money is not working for you. So this is where we teach people how to actually have your money work for you. Index crediting strategies. You can gain 3, 4, 5, 6, 7, 8, 9% growth on your money and also use it while you're alive. Like you'll see like tax advantages. There's a lot of tax advantages, not only for when you pass away, because in life insurance, whenever somebody passes away, their family gets that benefit tax-free. But then within the cash value life insurance policies, you can actually grow that money tax-free and also pull it out tax-free. Amazing, amazing features. And so you'll see like real estate investing. Some people will get a policy like an index universal life policy. And what they'll do is they'll fund their money and they'll put lump sums of money in it, or they may pay $200, $300, $400, $500 a month, depending on what they want to do on their goals. And they put it in the policy and their money gains 5, 6, 7% growth in the policy. And then they take it out and they go and invest in a property, or they take it out and they go and send their kids to college, or they take it out and they start or fund a business. I've actually have leveraged my policies, my cash value policies, while I'm living, obviously, to invest into different things that came up for business. A lot of people don't know that. And when you pull the money out of the policy, your money is actually still growing for you. You pull it out as a loan instead of going to the bank. You become your own bank. That's where you'll hear people talk about becoming your own bank within life insurance. But then when you take out that loan, there's a loan called participating variable loan. When you pull that money out of your policy, it is still going to grow and accumulate as if you never touched it. So while your money is being invested in a real estate property, or being invested in, you purchased a home, or you sent your kid to college, even though you pulled the money out, your money in your life insurance policy is still growing as if you never touched it with the PVL loan. Powerful tool. This is what wealthy people have been doing for years. It's just a lot of us are late to the party. And then you can also use it as retirement income. And one of the biggest things is a lifetime income as well, because the average person in their retirement accounts do not have enough money to be able to live off of it. And sometimes the average person will have to go back to work, or their kids or their grandchildren have to take care of them. So a lot of benefits within the policy. With my policies that I have for my daughter, I always tell people her first car, we're using her life insurance policy. Down payment on a home, we're using her life insurance policy. If she decides that she wants to follow in me and her daddy's footsteps, we're going to leverage her life insurance policy. Permanent policy. Now, there are some disadvantages as well. The price can vary based on age and health, because with life insurance, you still have to qualify by health and then, of course, by age. Some people think that you're supposed to wait until you get older, when in reality, you should get life insurance when you are young and healthiest, because that is when your cost of insurance is cheaper. And then the lack of proper education. That is one of the biggest things. As insurance agents, it is our jobs to educate y'all on what the products are, how they work, what the benefits are, what the advantages are, what the disadvantages are, and make sure that they're properly structured. Because with permanent life insurance policies, you actually have multiple types of life insurances. So you have your index universal lives, you have your whole lives, then you have your guaranteed universal lives. There's a lot of different permanent policies. So it's all based on the proper education and structure of the policy. And when it is done properly, it is an absolutely amazing product that can literally help you create wealth, not just for when you're gone, but while you are living. Now, let's talk about the next thing is, do you have some of these benefits? You may have life insurance, and then you may not have life insurance. But one of the biggest things is, if you already have life insurance, do you have some of the benefits that we have been speaking about? So for one, do you have insurance only through your job? If you have insurance through your job, typically through your employer, it's very cheap, it's very affordable, you get the group discount. But one of the things is when you have it through your job, you typically, when you leave your job, you can't take it with you. So it doesn't follow us when we leave. That's usually how it works. Or one of the bigger things is whenever you do leave your job, and if they do let you take it with you, well, you lose that group discount, and now you have a higher payment because you're no longer within that group to where you were getting that discount. And then you do not have living benefits in it through your employer. So one of the biggest things is living benefits. Let's dig a little bit deeper into it. So you actually have access to a portion of your death benefit while you are alive in the event that you get terminally ill, you have a chronic illness, you have a critical illness or a critical injury. And you'll see some of the examples like if a doctor, God forbid, were to diagnose somebody and say, hey, you have 24 months or less to live, then that person will be able to use that terminal illness benefit to take care of whatever it is that they need to take care of. The chronic illness, if somebody can't perform 2 out of 6 of their daily living activities, so that's like walking, feeding yourself, using the bathroom, different things like that, heart attacks, strokes, cancers, bad accidents. There's a lot of different things because a lot of times people are more likely to get sick than pass away. And the average person doesn't have enough money in savings to be able to take care of those things. And that's one of the biggest benefits with living benefits is that you get to use that benefit. God forbid something were to happen to you. And so one of the things that we tell people is it is absolutely amazing if you already have life insurance through your job, but you want to own you something outside of your employer so that you don't have to worry about when you leave, you lose the coverage. You can also lock in that insurability with your age and your health. And then you're also missing certain type of benefits when you have it just through your employer versus owning it outside of your employer. One of the things that we also talk to people about is one of the things with life insurance is based off of need. This is where it's all about customization. This is where it's all about people's goals. This is where it's all about people's budget. This is all about what people want to have set up and what they need. So some people may have an immediate cash need. So they're like, I want to get what's called a final expense or a burial policy. What that is it's something that people will get between certain ages, typically between 45 to 85 years old. And they're like, I literally just need this policy because when that time comes, I want a quick, immediate cash for my family to get and then not have to wait a certain amount of time, but I want a quick turnaround. So then we can just have the homegoing service and they don't have to wait for different things. The immediate cash will come with the final expense policy. Some people will use it to pay off debts. Some people have like credit card debt, or they may have different things that they don't want their family to have to take care of. That is what you would use some of those for. Emergency fund. Some people use it for like to set up for, you'll see here, for to set up a college fund for people or for trade schools, whatever the case may be. But some people need immediate cash. And that's what they'll do. And they'll actually have multiple policies. They'll say, I have this policy, I have the Lamborghini, but then I also want to get this policy for the immediate cash need and for this particular reason here. Then there's some people, you'll see the next category for ongoing needs. Some people may need it for income replacement, like God forbid, somebody's spouse or whatever the case may be passes away. We need to make sure that that income is being replaced so that we're not struggling and having to figure out what we need to do because now that income is no longer coming in. Or some people need it for supplemental retirement. These are different features and benefits that actually come into life insurance. People don't even understand, like typically when somebody passes away, like somebody still needs that income. So it's childcare, it's different things like household different things. Like sometimes we have to really stop and think what our family needs and what we need and what our estates need and be prepared. Because one of the biggest things is if you stay ready, you don't have to get ready. And then, of course, we talked about the living benefits, and that's where those where you'll see the chronic illness and long-term care and those different things come in because people need these things so that when life happens, people are not caught off guard and they're not shocked and they're not surprised, but everything is done. Then even for business owners, you'll have things like key person coverage, like You have your business. You have business expenses. You are building, you are making money. You're doing this. You sacrifice time and you build a business. And God forbid you are to get sick or you get injured or somebody passes away. That business needs to be covered. That's where key person coverage comes in. And then buy, sell agreement funding, executive benefits, collateralized debt, y'all, that will have to be a whole completely different video because there's so much depth that comes with life insurance. It's really, really deep. A lot of people just don't understand. It can take care of you, whether you're a family, whether you're a single person, whether you're a business owner that's just starting out, or whether you're a business owner that's running a multiple $1 million business. Life insurance is what you need, and it's things that helps people out. And so one of the things that we help people with is figuring out how much coverage they need and what they need. Because sometimes people will be underinsured, meaning they don't have enough coverage for what them and their family needs or their business needs. Then sometimes people may be overinsured. And then sometimes people have certain goals that they want. And this is where this formula comes in. And this is called the DIME method. And it's DIME. Debt means debt, literally, like outstanding credit cards, student loans, car loans, medical bills, whatever the case may be. And then income. Typically, it takes the average family about 10 years to bounce back for when the breadwinner passes away and their income is no longer going in because people have a certain lifestyle that they live. So then what we do is we'll cover somebody's income and you'll multiply that by 10 years. So if you make $100,000 a year, then what does that mean? That means that your family would need at least $1 million of coverage. Then we have mortgage. This isn't how much your home is worth, but how much is left on your home. So what do you have? You have a $400,000 home. Okay, and then you still owe $400,000 on it. Well, then that amount needs to be added into that formula because you need mortgage protection on that asset that you have. And then you'll also have it for education. People will have young children in the house and they may say, God forbid something happens to me before they go to college. Well, in this example, when we have 3 kids and we want to make sure that each of them has $50,000 to go to college or to do this or whatever the case may be, well, then that means that you need $150,000. So you see the formula on here, right? A husband, he has $8,000 in credit card debt. He has $35,000 that he still owes on his car. His income is $60,000. So times that by 10 years, well, then that's $600,000 that needs to be covered because of that income that would be missing. The mortgage still is owed $400K. And then their 3 kids, they want to make sure that they have $50,000 per kid for them to go to a college, a university, whatever the case may be, $150,000. So that means that this husband, this gentleman, would actually need that $1,193,000. That is how you figure it out. Sometimes people will get life insurance and they owe $400,000 on a home. They make $100,000 a year, but then they're only walking around with $50,000 of life insurance. Make it make sense. That is not the right formula because God forbid something happens. Well, now you're underinsured and your home's not protected. Your income is not coming in, but the income is not protected. Your debt is still there. And so that is what DIME is. DIME. Debt, income, mortgage, education. And then the most important step is to implement as much as you can afford. What does that mean? I just kind of explained that. You don't want to have a $300,000 home and still owe $300K on it, but only have $40,000 of life insurance. Well, that's not really balancing out properly because you want to make sure that that asset is protected. Then say that you're married and then say you have kids in the household. I've come across a lot of people that have turned into my clients that will literally be underinsured and then they never got the education on there's actually a formula to help you be able to cover your assets and cover your income and cover your family and create that generational wealth. And so one of the biggest things is implement as much as you can afford. But the word is also afford. One thing that we're very big on with New Modern Wealth is that we do not oversell. What that means is we do not put people in binds. If somebody cannot afford whatever that is, then there's different options that can be able to be reconsidered. So sometimes it's considering more than one life insurance policy, and that's called a blend. So then somebody may say, hey, well, I figured out my dime formula. We figured it out together, and I need $1 million of coverage. But because of my budget, I can't get all of it in permanent, but I do want something permanent, but I want to make sure that my debts are covered and my family is taken care of. Well, then that is where you can consider more than one life insurance policy and get you some of that coverage with a term policy, and then also get additional amount with permanent, and you blend it together and you customize it based on the strategy that is needed for your lifestyle. Sometimes people may just only need a term life insurance policy. Hey, this is what I need. My home is going to be paid off in 20 years. I just need this for this situation. Some people don't have young children in the household. So they may say, well, listen, I need as much permanent policy as possible because I want to use this to be able to do real estate investing. I want to use it because I want to be able to use this money as a supplemental retirement account. I want to use this money because I want to be able to fund a business or keep funding my business. Whatever the case may be, the most important steps is implement as much as you can afford, reconsider objectives if necessary, consider a short-term solution to a long-term need, and consider using more than one type of life insurance policy. Because one of the biggest things is that the average person is not educated on life insurance. And so that's why a lot of people don't have it. Or we will sit down and we will speak to people and they have policies, but it's not even the right policy that they need. And so one of the biggest things is that I do have to give a disclosure that this video was a free, again, free life insurance guide, but it is also for educational and financial information. One of the biggest things is, even though I gave you some of these secrets to the life insurance industry and you sat through this video and your mind is probably blown, and you're probably like, I did not know all of this existed with life insurance. One of the biggest things is that you have to still sit down with a financial expert. You still have to sit down and talk to somebody, because that is where licensed agents come into the picture. There's still a whole lot more. You have to figure out what strategy you need for your lifestyle. You have to figure out, like, okay, I like what Crystal said in this video. I really liked the term, or I liked the ROP, or I liked the Lamborghini, right? The permanent policy. But now you have to sit down and you actually have to get it implemented and sit down with a professional. And so whether you've seen this video on online, or you've seen it on somebody on our social media platforms, or you've seen it in the link in the bio, or somebody sent you the video, because we have a lot of partners and we also have other companies and organizations that are partnered with New Modern Wealth. And so the biggest thing is sit down. If somebody sent you or text you this video, sit down and actually get the implementation and get the further details of the strategic ways that you can set up the life insurance policy. But one of the biggest things that some people will ask is, well, when should I get life insurance? The correct answer is you should have been had life insurance. You should have had it 5, 10, 15, 20 years ago. And then the next thing is, well, I didn't get it last year. I didn't get it 5 years ago. Do you remember where I said that knowledge, people say that knowledge is power. But what I always say is applied knowledge is power. You have the knowledge now. You got the secrets. You literally got a free life insurance guide by an expert. And now what you must do is sit down, implement it with whoever it is that sent you the video, or if it was in one of our social media platforms, or if it's through our website, or if it's online. We would love to do business with you, because the biggest thing is that this is literally free information that sometimes people will make you pay for. And here with New Modern Wealth, we believe in giving education and we believe in giving free value, because I did not know this information a couple of years ago. And if I had known this information, it would have saved me a lot of heartache with my car dealership. And then I think about people in my family and I'm like, it could have saved my family a lot of heartache. I don't come from a family of wealth. There's a lot of times that people have to do fundraisers, people have to do GoFundMes, or people have to come out cash money to bury a loved one, or cash money like me and my husband did with our car dealership. When if people knew the secrets of the life insurance industry, so many more people would be well off. So many more people would be wealthy. So many more people would not be struggling. There would be less people living paycheck to paycheck. There would be more generational wealth. There would be less burdens. There would be less GoFundMe's. There would be more successful business owners. There would be more people going to college. There would be more people purchasing homes. There would be more people not losing homes. One of the biggest things is the speed of implementation. Just because you don't come from a wealthy family does not mean that one cannot come from you. So implementation, sit down with the person who sent you this video, or whoever you've seen this video through via social media or online, and let them know, I've seen the free life insurance guide. I like what I heard. This is what I want to implement, but I need your expertise to go into further detail with the strategy, because one thing that we know how to do at New Modern Wealth is we know how to take care of our clients. We know how to take care of our partners. And that is one of the reasons why we in the marketplace came up with this free life insurance guide. So I'm excited for the speed of implementation. I'm excited for your family's lives to change. And I'm looking forward to those that I get to meet. I look forward to meeting you. And if we never meet, I am glad that you got access to the secrets of the wealthy.